Hello, hello. Mm. Hello, hello. Whoever is there. Morning, afternoon, evening. We have a. We'll go through some pairs, break down some markets, analyze some potential weekly expansions, daily expansions. If any questions, let them know in the chat, so we can go through and analyze maybe specific pairs you are interested, or if any questions regards any specific tool, just let me know. I can cover it in the chat. So me specifically, been having trade on the euro this morning, long trade from failed bearish market structure. So let's see how does the open price holds, and we're heading further. At this point, we have a accumulation stage on majority of the time frames. Weeklies on breakout on the trending stage. The latest news regards the Automa. We've been working updating the latest Ultima tool, which gives us the all time frame ranges, highs, lows, gives us the peak formation and our stage 1, 2, 3 concept indications, and gives us the market structure. Basically concept regards the ranges, previous range and market structure. So it gives us the insight regards where we are in the trend, and does the range supports that or not. So you can see we break market structure to bullish side, and signs that we were following with the long bias. As soon we were having sign of strength on the charts. But the main focus in Automa, what we are focusing is high of the range or low of the range regards the current range, and then it's time rotation and liquidity. So that's the 3 pillars for analyzing the market. And then of course, the market structure is what's the leading regards to direction and your bias, which basically everything is 100% objective and automatically established by the next update, which will be AMD cycles for the market structure, which will indicate either an accumulation stage, manipulation, or distribution stage for each time frame. If any of you are looking at some pair, let me know. I can have a look. What do I think about it, and what does it tell us regards the Ultima? But regards my trade, it was a roll of the day. It failed 8-hour market structure breakout, bearish breakout. regards the managing the trades, we use partial risk-free risk management method, which basically you're closing your half of your position at break-even stage. So if we go at specifically the low, again we had low day with 8-hour peak formation low, which is part of the golden template, but the real kicker was this liquidity sweep, which was it was whatever the session is on. And so basically this engulfment, 1 minute bullish engulfment, is my entry bar, which is many of you guys who is from the members group, you will know we are working on automatic processes regards the entries, which will be entry bars, which will basically combines all the confluences what we just mentioned, hive the range, liquidity, and time rotation. So this is 1 bar entry for all that criteria. We have a low of the day, low of the week, which is low of the range. Then we have a 1 hour peak formation low, and we have a 1 hour time rotation. So it instantly gives us the entry, 1 bar stop, 1 bar stop or safe stop on the low of the day. So yeah, and for me, partial risk free, I am risk free already 1.6 pips, which is right there. In this week I was risk free, so my position at the moment is running, and I want to see this. I want to see what is this. Where is the V? Okay, the first target for me was to see reclaim of the weekly open, and I wasn't a charge, but this was perfect place to re-enter for coordination. But the first, you can see if we had a 8-hour peak formation low, 4-hour failed breakout even on 4 hourly. So we want to see how 4-hour candle finish the job. So stage 1, 4-hour open to, so basically to take out this high. Of course you have still invalidation, which is still proven otherwise, but as far as the daily open holds, we looking to the upside. If guys, if there's any specific questions you want to ask, just let me know, so I know what specifically you are interested to cover it. Because regards the Ultima tool, like I said, the key factors is the market structure and the range alignment synchronization in the same direction. Liquidity sweep, either peak formations or I use external liquidity to see which will be multi-fair market structure liquidity levels, which basically gives us the all external liquidities where market will target. So if we just simply look at the liquidity as our targets, Friday we had this nice spike up to take out this old 8-hour and recent 8-hour market structures liquidity. It's rejected. As soon as it's rejected, hive the week, we had this 8-hour flipping bearish storyline for recent liquidity sweep, so we were playing after news some shorts. From now, as we can see, this is that failed bearish market structures break attempt to the 8-hour. but same time we had this last daily liquidity level which been taken out and now holds us the bullish storyline. So as far as that, regards the market structure, how the market structure is created. Market structure is developed by many ranges, right? By single candles. So market structure can't go high. So basically, what's the objective for market structure? If we have a failed breakout to bearish side, so we're looking to go opposite side. If you're going opposite side, what's the target? Target is always liquidity. That's the little cluster there, what we are looking. So we're gonna combine them. Okay, do we have any key levels up there? Looks like higher we have yearly open. So we look any key levels at liquidity levels, and as far as weekly open, daily open holds, we bullish. That's the target. To the downside, I really, if I want to see price move lower, perhaps maybe that news candle low, which is maybe it's unlikely because there was opportunity already because we took out all this range, so market has the opportunity to take this out, fail and go lower. So lows been swept, so I'm more pro to going up, so I'm looking for buy opportunities. Of course, you always have to prove it otherwise, and open price is my buy shift regards the current range on the daily, and and the key is like I'm mentioning many times in the group, you as a trader, your job is to recognize where to look for entries, when to be bullish and when to be bearish, and you can easily recognize that by what? By sign of strength or sign of weakness. Sign of weakness, you are bullish. Sign of strength, you are bearish. Sign of strength, you're looking for buys. Sign of weakness, you're looking for sells, and you're playing from level to level, because that's we can recognize first sign of strength, first sign of weakness. We can recognize from the single range, from previous bars range with the current, takes out previous low, peak formation low, takes out previous high, peak formation high, time rotation, failed or reclaim, absolutely objective. And then once we have sign of strength or sign of weakness, we simply follow what? We simply follow market structure. We follow market structure, in which phase we are, either we accumulating, either manipulating or distributing, and instantly we align two time frames together, because if we have as we can see, weekly is on trending, it's distribution up, so it's weekly is having bullish trend. So where was the last weekly's breakout? As you can see, this is the market structures cloud, so that was daily's breakout. So in the cloud we accumulated, we broke out of the daily's market structures cloud, so we in daily's trend stage, it came back in the cloud, so we again reaccumulating at this stage, but weekly is already in the trend stage, so weekly is already trending stage. So what does daily? Daily pull back, reaccumulating, and now we want to see how daily aligns together with the weekly. So we basically, what we need for the daily, we need sign of strength. How the sign of strength is represented on the daily? It's represented by the dailies or obstacle time frames sign of strength. So what's the obstacle time frame for daily? Is one time frame lower, it is 8 hours. So what we want to how the sign of strength is represented on the ranges: peak formation low, open price reclaim, time rotation, period. So what we have here, we have a 8-hour failed bearish breakout, which is another key level, which basically we will, it's you know, algorithm will monitor market structures breakout levels, peak formations, and time rotations. These 3 levels is what can change the state of direction of the market structure, either up or either bullish or bearish. And then depend of which phase you are, accumulation, manipulation, distribution, either you know which direction you're going, and thus you aligning together with high time frame trend. Hi Matthias. Yeah, anybody has any questions, just drop them in chat, or if you want to check some pairs, so let me know. And that's it. It's just, you know, if this then this, if this then this. So that's the main factors. And as I mentioned, your goal is to recognize, okay, where is the entries, which will be, you know, liquidity, time. So basically, it's liquidities will be to recognize where is entries, regards sign of strength, sign of weakness. The next, your entry trigger will be entry bars and time rotation with small time frame, you know, stop hunts on liquidity, small degree, and basically in line in the same direction as the market structure. And then once you have a, you know, your execution, your only job is to get, you know, mitigate your risk as soon as possible. So you recognize the entry bar, time rotation, you know, bullish or bearish, sign of weakness, sign of strength. You execute, and your only job is to get risk-free. Risk-free is basically, you know, mitigate your risk as soon as possible. As soon as that's done, market moves in direction, happy days. If it takes you out, you break even. So for me specifically, I am very, very aggressive. I can be break even in 1.6 pips. My stop loss is 1 pip. If it takes me out, I will have a re-entry. I will have a, you know, a gain condition set up for, if you just go back to that entry bar, and if we check again, like which would be secondary re-entries. As I said, you wait for trigger the entry when you bullish or bearish. That's, you know, sign of weakness, sign of strength. Failed bearish, mega structure break, sign of strength. So low of the day, low of the range. So sequence always starts from low of the range, high of the range. Whichever time frame you prefer, is it, you know, weekly range, daily range, 4-hour range, 5-minute range, doesn't matter. Monthly range is the same principle. The, you know, the sequence, how we start our, you know, automatic kind of algorithm sequence, that's, you know, we need to have a reference point, which is low of the range or high of the range. As soon as you have a reference point where to start the sequence, from this point I will say, okay, I have a, you know, low of the range after liquidity sweep. So 8-hour market structure breakout failed. So first check, liquidity check. Next one, I have low of the day, low of the range check. I'm waiting for time rotation. Time rotation is what? Bullish or bearish presence flipping over lower time frame range opposite direction. Like in this case, this is hourly open, this black dotted line, which is represents hourly color code. So we have hourly time rotation, hourly open opens, hourly candle, you know, all the previous hours was bearish, right? So down bars, down bars, down bars. What do we want to see? We want to see evidence of the bullishness flipping time rotation, which is flipping this hourly. As soon as it engulfs, it's like, yep, that's our 1 hour time rotation with 1 minute engulfment candle. You had a what? You have a low. Just think about the context regards this price action. We had a push lower, we had a push higher, this push lower failed to take previous low out, and we engulf with the engulfment closure right above the 1 hour open. That's 1 hour time rotation. So we have all the criteria: time rotation, check. That's my entry. I wait 1.6 pips. I'm partial risk free. I close 50%. My stop loss 1 pip. If it takes me out, I don't care. It's scratch trade. I literally would wait for another entry. How it's gonna look re-enter again? Again, same principle. If this is the true low of the day, it never should come back, right? It never should take this out. So what I want to see, following continuous bullishness in my direction. So either locally peak formation lows, little sweeps, and time rotation. So what happens? Opens new 15-minute, bang, pin bar engulfment. This, like bluish, it's pin bar engulfment. It's instantly what does it mean? Look, it's dropped down, took out this previous candle, closes a engulfment, close above a pin below, close above what? This 15-minute open. That means what? In 1 minute flipping bullishness on the 15-minute candle as it starts. So that would be my entry. Again, 1.6 pips. I will be partial risk free. Partial risk free formula is simple. It's stop loss plus commission fee. So what this concept, what does it does? This concept basically combines scalp entries for swing trades. So what we have now, where's the weekly open? 8 hour open, daily. Let me check on 15 minutes. Hi everybody, please check GBP, GPY. What means for the table up? Oh, hi Dan. Up it will be bullish, down will means bearish. So it will be, accumulation, manipulation, distribution. So it means accumulation, bullish accumulation, bearish accumulation. I was thinking like to have just a color code, like just green with the icon, green with icon, green with icon. But as I know, some guys use the acronyms so they can recognize. If you can't recognize the color, so you need to have this setting on time frames, which basically gives that gives the acronym daily, weekly. So I was like, okay, I'm not gonna kind of go with the colors because it means I still will need to add some changes. So first I was thinking to have a arrow up or arrow down, so for bullish or bearish, but that arrow was quite small, so I didn't like it. So I was like, okay, just gonna put up or down. Up means bullish, but down will be bearish. The update is nearly there. I need to add one more condition when it comes and goes outside the cloud, so it's change the accumulation or trend trend phase. But yeah, that's been there. And then next yeah, looking definitely this week to have update. And another thing, I will test it regards the market structures cloud. So regards the market structures contraction and expansion, which is basically when the market structures cloud contracts or expands. Yeah, I agree, colors look easier, but like I said, we have some members who prefer the have acronyms because if you can't recognize the colors, so it's easier for just to read it. So down up should do the job. Yeah, or maybe I can add the option so it's just colors or just add the acronyms. Actually good idea, because we have this option time frame which adds the acronyms for time frame, so I will add when you click that you will have up down, otherwise the coloring. So actually good idea, thanks. GBP GPY, actually let me check. GBP GPY. So we're coming from it's like whenever you come to the chart, basically track your price action, you know, from the current point. Just say, okay, where are we coming from? Where are we coming from today? You know, at this like comes from low of the day, low of the week, low of the month, whatever. The next, okay, you know, yesterday or previous day, you know, are you coming from something specific on previous day? Previous day you can see was inside day. So what does it mean? It means today 50% is more important and open price, right? So open price and 50% is really tight club. We have, I think the sculptor was asking this question on workshop. Oh no, the Nelson was asking this question on the workshop. So, you know, why you know, open price and 50%, how it plays the role when they are tied together. You basically want to see, you know, do we put major, high, low at that. So basically how current open price relates to previous 50%. So let's say that was Asia. So when you come to the London, what you're focusing, high of the 8, right? Why we're using 8 hours? Because it's absolutely gives you objective session division regards the Asia New Year, Asia London New Year. 24 hours equals 3, divides 3, it's equals 3, right? So you have 3 8-hour ranges, which is 100% objective, and you don't need to think about sessions, which you know, 3 hours or 2 hours for indices, for crypto, for each market you have slightly different sessions. So it gives you what? Subjectivity, where you can't apply the same mechanics for every single asset. So in this case, you're just focusing what? On session trade, will on session high, low, session high of the range, low, the range will be what? High of the 8, low of the 8, period. So we come into London, what we have, high of the 8, respecting high of the day, which is previous 8 hour, and where we are at failed markets, sorry, peak formation high on the monthly. So what does it mean? It means all this push up was failed breakout for monthly. So what we done, we put high of the month, monthly open, high of the month, bang, we failed on the previous month's high. Look at that high of the month. Where the high of the month rejected? From peak formation high on weekly. Absolutely lovely. Easy trade. Easy trade. Yeah, I'm working on, like I said, I'm working in some extra conferences for Market Social Cloud, which relates to the studies of Elliott wave, but specifically not Elliott wave like wave counting, but more specifically like so what Elliott wave how to say, what is the purpose of Elliott wave, like recognizing the waves, like, you know, what's the purpose for market, or what's the purpose for technical analysis? You know, purpose for technical analysis is like what? Align you know, your trades in sync with the trend, right? So you want to recognize the signatures when the trend is changing. So from accumulation, you know, from manipulation stage, from manipulation stage to accumulation stage to trend stage, right? So that's basically your goal: trend stage, manipulation stage, accumulation stage, trend stage, reaccumulation, trend stage, reaccumulation, trend stage. So basically your goal is to recognize, signatures when market is changing behavior, either just single ranges, because that's where we're gonna apply signal bars, inside range, outside range, reset range, triple highs, triple lows, and so on, so on. What does they represent? They represent that, previous range had some significant changing in behavior, right? So now we kind of going further than that. We adding market structure into that, where basically we know that, how the market structure is developed. Market structure is developed by single ranges, right? Single candles creates together what? Market structure. So, and what is the market structure's job? Market structure's job is to establish the trend and trend till, hits the manipulation, and again, either reaccumulate and trend or, reverse. So you have, again, simple sequences with simple phases, and you have objectivity with the levels of the sign of strength, sign of weakness from the ranges. So knowing that, we have a, ways to recognize absolutely 100% objectively and automatically how to recognize when, market structure have some kind of change in behavior. That will be with contraction range, market structures contraction and market structures expansion, which is only two ways how the market structures can reverse. so yeah, probably in this Wednesday's workshop I'm gonna go through more detail in AMD and more detail in market structures, what's called the expansion and contraction areas, zones basically, and then to look how ranges and lines in that direction of high time frame market structure. So on this case, and then basically, regards the, like I mentioned, regards the Elliott waves, what's the purpose for Elliott waves is to establish, to have evidence establishing by rule base establishing trend. But I'm not interested in the wave counts or whatever, because the drawback by Elliott waves for the you can give the same chart like 10 people, and each of them will draw the waves different, which is automatically subjective and doesn't help me. But for me, the purpose of Elliott waves is, the purpose for Elliott waves is what? To establish trend and recognize by the wave count to establishing trends. And as you will, if somebody is familiar, wave 1, 2, 3, 4, 5. I'm more interested in the first sequence on wave 1, 2, and then to see follow up, because that could be absolutely objectively what's the purpose of wave 1, like is the first impulse. So basically what I'm looking to add into market structures cloud is to recognize that first impulse which is changing the market structures state, and recognizing that first impulse which changed the behavior, and have this evidence of changing some kind market structure. Because with the cloud, what is your basically the market structure is what your expectation, what's your anticipation for market structure. If we establish bullish break, we want to see what? We want to see that market structure starts to trending up, right? Making high highs, high lows. That's the trend phase. So you simply can ask, okay, how I can recognize that, in this when it comes from low market structure, from bearish to bullish, how I can recognize. And that can be established by like I mentioned, highlighting when we have a contraction, which is there. Again, we have a contraction, which is there. And then we have a expansion, which is there. So either contraction, which is example on this one, or expansion, which can give us the signs on each time frame, when we have a changing behavior on the market structure. And then same time, we can measure, okay, when is that kind of Elliott wave first impulse. Can we recognize that first impulse with the 100% objectivity, which in this case, at this point, after this point, we will recognize that this is first impulse on bullish trend phase. So this is the first impulse on dailies market structure, and after this point we will know that we in progress in second correction of the first impulse, and in this phase, so basically in this price action, we are looking for what? Sign of strength to align with this impulse and targeting the trend on the daily structure. I think I can ask the question in the chat, like, so what is the sign of strength for daily in this price action? So in this price action, what is the sign of strength for daily time frame? Whoever is member, they should know it. So sign of strength for daily is peak formation lows on obstacle time frame, which is 8 hour, or peak formation lows for daily. So that would be after this point, our sign of strength will be instantly this price action right there with this 15 minute. So we can pinpoint exactly our, when we are bullish. So because we know we have this, daily is in bearish trend, we in reaccumulation. So if you're in the reaccumulation, where we gonna be bullish? We're gonna bullish right after this peak formation low. So that's where we're gonna, me specifically in 1 minute, I will be looking for entries like that. Then reclaim of this open price, probably like, small time frames there and there. And we again failed, and reclaim of this. This is New York session, New York's 8 hour, low of the day. Again, resets that the sequence, low of the day, sweep, 15-minute time rotation. Again, resets the low of the day, peak formation, time rotation, even stronger. This is golden template because we have 8 hour, which is obstacle time frame. Golden template is low of the range with at least obstacle time frame peak formation. So this absolutely perfect, like entry either in this engulfment on 15 minute on lower time frames, or after this 15-minute pin bar on lower time frames again. And now, just because we know how we have objectivity regards, what the market structure on daily should start, it's established trend right there, but now we adding plus, confirm that's the first impulse, possibly on that 1, 2, 3, 4, 5 Elliott wave count. So we, I don't care, is it 5, 3 pushes up, 5 waves or whatever, but I'm more interested in like, okay, that's the first impulse, so I know from this stage, you know, I can more aggressively get into here, because I know by, you know, by the Elliott wave rules, whatever, when second wave turns, the third wave is the most explosive. So I know if we establish trend, and if that's the first impulse, I want to get correction and then a line there for, you know, compounding up. Of course, I will look well, like, you know, as everybody knows, when we look for targets for us is liquidity. So if we just if we just mark this as oh jeez guys, come on. So that's, you know, our entry. So looking for explosive move. So I'm looking the targets, the liquidity levels from this point. So liquidity levels from this point, as you can see, we had above it liquidity levels, daily liquidity levels, and we had quarterly liquidity level right there. So it's took out, push higher, reaccumulated, took out, push higher, took out, so hit all the liquidity levels what we had above, and instantly had a correction again. So at this stage, when you know you are trending, probably not on just daily but weekly and perhaps monthly, maybe in bullish accumulation at that point when the price was here. So your job is to focus on what? Low of the days, low of the weeks, every single day, because once you establish your bias regards the market structure, you know where it needs to go. So your job is again to come to the screen, recognize what? Sign of strength, right? If you're bullish, your job is recognize sign of strength at your choice of the time frame. So if you know, intraday, so you want to see what? Low of the day with strength, peak formation low, open price recline, and just compound it. You're trading weekly, you know, you want to see sign of strength of low of the week, and you know, you can easily every day add on the low of the days in the same direction. So that's at least how we look into that. 8-hour big formation, low time rotation. Yeah, that's the obstacle time frame, correct, for daily. Regards current price action in GBP GPY, I think there's not much questions to ask. Just look at the today's price action. So today's price action is from 11 Sunday. Oh no, from this year. So today's current price action, we took out previous week's low. So we have a monthly's golden template with weekly's peak formation low, where at previous month's 50%, which is nice confluence. So obviously what we want to see, you know, we want to see that first time frames to roll over. So if you're looking for a higher time frame, first time frames, that's you know, we want to see 8-hour reclaim, daily, weekly reclaim, and monthly is there. So whenever, if you know, because at this stage, this is not peak formation yet. At this stage, you know, for me personally, if I get entry, you know, on 1 minute down there, I'm sure there is like, you know, entry bar. I'm not gonna be surprised, because you always have, you know, some kind of like, remember, like whenever you take the liquidity, you will always have some kind of retracement, you know, either retracement or either reversal. For me specifically, I take, you know, like I said, 1 pip stop loss, manage my risk in 2 pips. So I take all day long entries when they have all the criteria. Just let it load in. So what do we have? It's even quarterly and yearly peak formation high. That's, yeah, this cluster of levels is really strong, because look at that's monthly open, monthly open, day, weekly open, previous month's high, peak formation high, quarterly peak formation high, which is really, really strong levels. Like, look here, we really rejected from that monthly zone. So down there, what would be my entry bar? My entry bar on 1 minute. So again, what we need, what is our fundamental pillars? Sequence starts from where? From load range. So we have load range. Do we have a sweep? We have a locally, at this point, we have 8-hour peak formation low. So then, so basically that's, tells us where to look for buys. You get bullish when you have sign of strength. So now next one is like, you're looking for what? Your entry trigger. Entry trigger is time rotation. So what we want to see? We want to see bullishness at open price. So where we have bullishness at open price, obviously we know from the, whichever point, what will be the first, time frame to flip. 15-minute, hourly, 4-hourly, depend, how recent it's open. So what we have push up, reclaim that 4-hour peak formation. New hour starts. What we have, bang rejection, pin bar. That's bearish time rotation on hourly. So was hourly job? Hourly, could do this, right? So it comes down. That's new 15-minute. That's new 15-minute opens right there. Instantly we have what? Peak formation on 15-minute. Bang. With what? With 15-minute time rotation on 1 minute. So what does it tell us now? It tells us now that this is new hour. So previous hour put low the day, pushed up, new hour retraced. That's low the hour. That's low the previous hour, right? Previous hour's low. So what does happen? Small time frame order flow. It respects. This previous range puts significant high low. Yep, puts significant low the day. So what we see at low the hour? We see new 15-minute bullishness, pin bars engulfments. What we do? We flip this 15-minute, because this was bearish 15-minute, right? What's the job for this 15-minute? Take previous 15 minutes and continue to take this one out, right? Fail. As soon as it fails, we have bullishness, bullish price actions at the 15-minute time rotation with 15-minute sweep. What does it sweep is? Sweep is stage 1, as we know our S3 concept. Stage 1, peak formation low. Stage 2, time rotation. What's the stage 3? This 15-minute, if this is bullish 15-minute, what's this 15-minute job? Take out previous 15-minute. Done and dusted. So, entry bar, this. For me, that's the entry. Partial risk free, 1 pip stop loss. Happy days. Objective 100%. Even if you not as aggressive or don't use partial risk free risk management system, and you just like, okay, your entry here, your stop loss here, blah blah, and you still follow this S3 locally on this 15-minute, because what is the objective for this 15-minute bar? As I said, if that's up bar, bars can go only up or down, right? So it's instantly you have objective direction. If this is up bar, it must take out previous high, right? either it's run out of time and next 15 minutes need take this 15 minutes out, period. So if your entry was, let's say here, and your stop loss here, that's mean as soon this 15 minute takes out this prior 15 minute, which is this previous range high, it gets reclaimed. That means you, as soon as it hits, you must to manage your risk. In this, in this move, your risk needs to be managed. As soon as it hits, it means, you move your stop loss to break even. If it comes, takes you out, fuck it. You're literally looking for re-entry again with time rotation. Rinse, repeat, nothing else. So, hope this helps. Regards this pair. So, this, okay, what is your, if you're, depend, like I said, depend of the, depend of which range you're using. Let's say you intraday trader, so, what's the bias, everything is bullish accumulation. You want to see, okay, what was the last breakout on 8 hours and what was the last breakout on daily. So on both of them, market structures breakouts was bearish. So both of them, so it's either this failure to, go lower. So we are bearish trend, but now we have a back in the cloud, so we in reaccumulating. The accumulation. So as far as we have a strength, it might be first sign of reversals. If we have a, bearishness, sign of weakness, that will be what? That will be your, possible trend continuation on the daily 8 hour, on 4 hour. As you can see, that's the last breakout. How you can recognize? Simply again, if you use session highs, lows, 8 hour, so you're focusing on, hive the range on dailies. So this hive the day, 4 hour peak formation at the bearish breakout market structure on 4 hour. That's super bearish. Like this entry here at hive day is super bearish. Why? Because the 4 hour trend gets established in line with bearish trend on daily and 8 hour. So basically smaller time frame and lines in the same sync with the high time frame. So then if that's high day, that's 8 hour, new 8 hour, what you want to see, same continuation. What's happened? We went all the way down and took this liquidity out on the daily, which is same as peak formation low. If we switch on market structure liquidity, there you go. Market structure flip bearish on this, which is bearish breakout. So what's the market structure's job? To come down, take out liquidity, right? It came down, took liquidity, look at liquidity, reaccumulated, created new liquidity, took out liquidity. So that's, failure to take out liquidity on continuation, and that's what stage 1 on market structure, right? So sign of strength for daily's market structure. So, and on Automa you can see what's that. Sorry, on Ultima you can see that's, back in cloud, that's stage 2. So for market structure, if this again is, sign of strength, so we're looking for what? Reclaim the open and heading to the opposite side of the cloud. So yeah. So now how about this hive the fall? This is like legit setup. Like, yeah, the next step I need to add in the market structure phase, accumulation multiple distribution, is basically so it indicates what was the last breakout regards each time frame. Because as we know, 8 hour last breakout was what? Bearish, right? Market structure's breakout is bearish. So what we want to see? We want to see how 4 hour end lines bearish, right? And same time how the ranges have a weakness and follow. How the 4 hour follows, right? What is what's the 4 hour for 8 hour? That's the obstacle time frame. So 8 hour can't, you know, go higher if 4 hour fails, shows the opposite direction. So basically this high of the 4 was continuation on the bearish trend on the above time frames. Again, you have peak formation high, 1 bar entry, 1 bar entry, 1 bar entry. You risk free, you have all your criterias, liquidity, high of the range, time rotation. In this case you don't have time rotation because it's open is there, 50-minute is there, and that's 55. This is new 50-minute. So yeah, I hope this helps. I will wrap it up. If there's any questions, let me know. I will answer last questions, and that's it for the day. So yeah, we have nice reaction from there. So let's say that's, you know, what we have. 4 hour open, bang, this 4 hour aligns with the previous. So 8 hour previous range low, rejection. Interesting. Maybe I need to add even 8 hour. No, sorry, I need to add maybe previous range flip for bearishness. Alright, we'll think about. Or wait now for new hour open. Yeah, always. Yeah, exactly. 100% sure. So you always want to be aware of time rotations on coming, you know, on coming time frames, because, you know, you could have a retracement before new time frame opens. So just simply, you know, enable your time rotation, you know, which time frame you want to see above, like let's say hourly, so we can see, you know, next hourly opens right there. That opens new hourly, and then our next 4 hour and 8 hour opens right there. So yeah, it's gonna open new hourly and continue exactly. So good observation. Yeah, like this, like, you know, the manipulation timings is pretty much like 15 minutes prior new hour. Yeah, no, like you will notice it definitely like 15 minutes prior hour, like half an hour prior 4 hours, you know, and something like that. That's, you know, and soon new time frame opens, you know, that's where the easiest to flip the markets, right? Because of the manipulation stage really close to open price, because open price is the one which decides which way it goes. So yeah, that's like, you know, if once you master it, partial risk free, there's no excuse to don't trade both directions, you know, because you remember one of extremes will always hold, you know, high day, low day, one of extremes will hold every day, you know, most of the days, if you don't have outside reset bar or outside bar. Same as high of the week, low of the week, you know, because remember, what's the purpose for the market? It's to establish trend, right? To seek the liquidity and establish trend. So once the trend is established, you know, if you aligning a new, you know, high day, low day, high day, low day, that low day will hold, right? So that's how you compound your results. So yeah, alright guys, thank you very much, and see you next week. Bye.